This is Alan Bush with Archer Financial Services. As usual, let's start out with stock index futures. In the overnight trade, we did see some pressure developing with S&P down as much as 9 points due to China's non-manufacturing purchasing managers index coming in weaker than expected. Since then, though, we did see some recovery. In fact, futures this morning trading higher in the S&P. I think one reason for the recovery is we do have Bernanke scheduled to testify before a congressional committee this Thursday. And I think that would be an opportunity for the chairman to provide hints of any type of additional easing. So I think the potential for easier credit from the Fed, possibly to be hinted at this Thursday in that congressional testimony, should support stock index futures this morning. And I think that will probably be the dominant influence up until or possibly after his Thursday testimony. So from here, look for better prices in stock index futures in anticipation of more accommodation from the Fed. As far as the foreign currencies are concerned, I think that influence that is likely to help stock index futures will also tend to support some of the currencies and potentially undermine the US dollar, at least temporarily. So from here, I would expect some short covering strength to develop in the euro currency, possibly some stability in the commodity currencies, the Australian dollar and the Canadian dollar, which have been under severe pressure lately, basically due to the potential for the Fed to hint at easier credit, as we mentioned, possibly at this Thursday's testimony. I think this is only going to be a temporary situation, a short covering move with a very strong likelihood of no follow-through later into next week or beyond. So just look for some short covering in the euro currency and the Australian and the Canadian ahead of Bernanke's testimony this Thursday. And I think that may be all we see on the upside. After that, the main trend exerts itself, which is lower for those currencies. Credit markets under some pressure today as stock index futures firming. Any additional accommodation from the Fed is, of course, very bullish for the credit markets, and I believe the main trend for the Treasury futures market is still higher. I would like to remind everyone that these are my opinions alone and not the opinions of ADMIS or Archer Daniels Midland.